Hi, I'm Aurora Davidson, CEO of Amerigo Resources. 4 years ago, in October 2021, Amerigo launched its Capital Return Strategy, or CRS. I want to take a few minutes of your time to highlight what the CRS has meant to Amerigo shareholders. As you are aware, Amerigo CRS comprises three components: quarterly dividends, performance dividends, and share buybacks. Over the past 4 years, we have utilized the three components to return $93.7 million to shareholders. 67% of this return has been through dividends, paying a cumulative dividend of 51 cents Canadian per share, and 33% through buybacks, retiring 25.6 million shares, or 14% of the shares outstanding at the start of the CRS. In terms of total return to shareholders, Amerigo has outperformed mid-tier copper producers, copper ETFs, and copper futures since October 2021. The total returns shown in this graph capture two tangible and measurable market-verified metrics: share appreciation and dividends. But in terms of your returns as a shareholder, there is more to investing in Amerigo than dividends and share appreciation. The third leg of the CRS, share buybacks, ultimately generates a positive impact for shareholders by decreasing the number of shares to which dividends are paid. Over time, the positive effects of a lower share count will be reflected in the total return numbers through an increased dividend per share, assuming all other factors remain equal. However, until that happens, the impact of buybacks is not as visible as the impact of dividends. It is subtle, but still powerful. Now, there is another subtle and powerful aspect to investing in Amerigo. Buying Amerigo shares is a tremendously cost-effective way to own copper. In fact, over the last 4 years, it has been cheaper to buy a pound of copper through the purchase of Amerigo shares than to buy that pound of copper in the LME. We believe we have found a compelling way to illustrate the importance of these four avenues of return: share appreciation, dividends, buybacks, and a discount to the LME copper price. We have examined them in relation to a pound of copper produced by Amerigo in each CRS year. As you can see from this graph, all of these performance components are significant to shareholders. We'll take a look at this data in a moment. However, let me first show you what has happened to the LME copper price over the past 4 years. In this graph, we show the gains or losses made by the average LME copper prices in each year of the CRS. In year 1, the copper price increased by 24 cents per pound. In year 2, it decreased by 35 cents. In year 3, it gained 20 cents, and in year 4, it gained 26 cents per pound. We can argue that this has been a stable copper price environment with no significant changes from year 1 to year 4. A buy and hold strategy with copper itself would not have been tremendously productive for investors over the years of the CRS. As I mentioned a moment ago, to measure Amerigo's performance against the LME copper price, we will be using the concept of the cost of a pound of copper through the purchase of Amerigo shares. This calculation is done for each CRS year by dividing Amerigo's average numbers of basic shares outstanding by the annual pounds of copper produced. This gives us the number of shares per pound of copper produced, which we multiply by the average share price in Canadian dollars, and then we just translate it into US dollars. Now we have the cost of a pound of copper through the purchase of Amerigo shares. This table shows us the average total cost of those Amerigo shares per pound of copper produced by the company before the start of the CRS, that is CRS 0, and for the 4 years of the CRS. By also looking at the average LME copper price for each CRS year, we can calculate the discount of Amerigo's pound of copper through owning Amerigo shares to the LME copper price. This table shows us that it was extremely inexpensive to purchase a pound of copper through owning Amerigo shares before the CRS was introduced. In other words, in relation to the underlying commodity, there was a clear undervaluation of Amerigo's share price. Since the CRS was launched, Amerigo's share price, and therefore the cost of the shares per pound of copper produced, has increased. Of course, this is what we wanted and what investors wanted. Consequently, that discount to LME copper has become smaller over time. However, even if the discount has decreased and may disappear, buying shares in Amerigo remains the most cost-effective way to own a pound of copper, as we will demonstrate next. Here is a basket of benchmarks. As you can see, not all mid-tier copper producers provide a discount per pound of copper produced against the LME copper price. In all cases except Amerigo, investors have been purchasing 1 pound of copper at a premium to the LME copper price. In other words, controlling a pound of copper through holding their shares has a higher cost than the LME copper price. In some cases, a significantly higher cost. For an investor seeking maximum exposure to copper per dollar, this outcome is crucial. Why is that? From looking at these numbers, we can conclude that Amerigo is a here and now copper play. The premium seen in other participants in the copper space may come from investors' expectations of future performance, which is similar to paying a high earnings multiple on a growth stock. In Amerigo, you are not paying for future production growth or for investing in other metals. You are controlling a pound of copper as cheaply as possible and in a more effective way than peers and copper itself. What does that price difference look like? We have also calculated the effects of share buybacks per pound of copper produced. The retirement of shares in Amerigo's case provides an additional return to shareholders. This contrasts with dilution through the issuance of shares in the benchmark comparison. By analyzing buybacks through the lens of a pound of copper, the impact is more visible than in the total return numbers. Let's revisit the graph we mentioned earlier. I hope it is much clearer now why Amerigo's returns over the last 4 years of the CRS have come in 4 flavors: share appreciation, dividends, buybacks, and the discount to the LME copper price. As the discount has decreased, share appreciation has increased. Dividends and buybacks have fueled this performance. Amerigo CRS has been a game changer for shareholders, outperforming other copper investments. This has occurred on a total return per share basis and also on a per pound of copper basis. Amerigo rewards shareholders with predictable and consistent quarterly dividends, performance dividends when copper prices rise, no dilution, and the most effective way to control a pound of copper. We look forward to many more years of success for the company and for its shareholders.